The United States is the deepest, most dynamic, and highest growth market in the world. It is transparent, and the liquidity is unmatched. I've long held that there is no reason for me to invest in businesses outside of the US. However, investing in quality is not limited to my own country. Quality businesses exist all over the world. But there is one that is truly worthy. One that is in a cutting-edge growth industry. One that is a monopoly in the truest sense of the word. One with an economic moat so wide that it will stand for decades to come. That business is ASML. And ASML just released their latest earnings. Let's discuss. Welcome to The Quality Investor. Today, this video will be more an overview of ASML's earnings rather than a deep dive into the business itself. While I'll touch on some of their high-quality characteristics, ASML is reaching price levels that can no longer be ignored. ASML is a monopoly. Not a monopoly in that customers prefer their product over others in the market, such as Google's search or Apple's iPhone. These products simply dominate their markets. No, ASML is a monopoly in that they are the only manufacturer of an EUV lithography system that is an absolute requirement to produce today's leading chips and AI chips. But before we get into it, please like this video and subscribe to the channel. It only takes a second, helps us grow, and you can stay on top of all the quality businesses in the market. They make other products, but this EUV system is a highly advanced semiconductor manufacturing technology used to create intricate and complex modern microchips with nanoscale features. It allows for finer and more precise patterning compared to older deep ultraviolet or DUV systems. This precision is critical for producing cutting-edge chips used in smartphones, AI, data centers, and other high-performance computing applications. ASML is the only business in the world capable of producing and supplying these machines at scale. These machines cost over $200 million each and require significant infrastructure and maintenance. These are the result of decades of R&D investment, and these are essential for the top semiconductor foundries in the world, such as Taiwan Semiconductor and Samsung. This makes them a cornerstone of the semiconductor industry. I touched on just a fraction of what makes their economic moat so wide. They have exclusive technological expertise. This takes decades to acquire and serves as a high barrier to entry for competitors. Aside from highly capable and technical human capital to recreate these systems, massive financial expenditure is also necessary. This has created market exclusivity as a byproduct. They are the sole supplier of these systems, creating their monopoly, but the market is not large enough to justify another entrant into it. ASML shipped 57 EUV systems in 2024, generating nearly half of its revenue. And because they are the market, there are high switching costs for customers. They need ASML to maintain and service these systems. Switching to something else would decimate the manufacturing capabilities of the foundry. That is just a small snapshot of ASML's wide economic moat. I want to do a deep dive into ASML in a future video. Today, it is about their earnings. I want to go over their earnings report, assess why the stock fell despite a solid report, and discuss a good entry point into this stock as a quality investor. So, without further ado, let's get into it. It turned out to be a rather bleak earnings day for ASML. You can see that they're down 7% after today's trading at $634.93. That means they are now down 7% on the day. And year to date, they have not fared much better, down 9.35%. But on a 1-year basis, things are looking very bleak, down over 35% in the last 52 weeks. ASML, however, posted a fairly strong quarter. They had 7.74 billion euros in sales. However, that was slightly below consensus estimates of 7.76 billion in euros. However, that revenue miss is only a part of the reason of why we saw that 7% decline today. Beside another wild down day in the S&P 500, where we saw another 2+% drop, ASML missed on another important metric scrutinized by Wall Street investors, and that is net bookings. They had 3.9 billion euros in net bookings in Q1 of 2025. Wall Street was expecting in the neighborhood of 4.82 billion in euros for net bookings. Net bookings is an important metric for ASML because it represents the total value of orders for their lithography systems. Now, these are counting both the EUV and the DUV systems. This helps analysts derive what future revenue potential might be. It's worth noting that their net bookings for the EUV, or their monopoly system, was at 1.2 billion in euros. However, I think the real culprit for why ASML fell today was in the remarks of the CEO. First, he did note that their conversations so far with customers support our expectation that 2025 and 2026 will be growth years. However, the recent tariff announcements have increased uncertainty in the macro environment, and the situation will remain dynamic for a while. That's essentially CEO speak for we have no idea what's about to happen. And Wall Street hates uncertainty. Thus, they were punished duly today with a 7% drop in the market. However, there are some positives to take away from this earnings report as well. The first is ASML continues to expect 2025 total net sales to be between 30 billion and 35 billion euro, with a gross margin between 51 and 53%. Essentially, they reaffirmed their 2025 outlook from the previous quarter. That's important because we are in an uncertain tariff environment, and none of those tariffs were instituted when ASML did their outlook last quarter. The other positive aspect is this gross margin here of 54%. That's a 300 basis point increase over the prior quarter a year ago, Q1 of 2024, at 51%, and sequentially from last quarter, about a 230 basis point increase from 51.7%. So we're seeing them expand their margin and gross margin nonetheless, but that trickled down to the margins at all levels. We see a significant increase of the operating margin, 35.4% this quarter versus 26.3% a year ago, as well as net margin of 30.4% versus 23.1% 1 year ago. All of this is demonstrating the strength of ASML's business despite these challenging circumstances we are in the global economic environment. And to me, this really does underscore the importance of ASML to the supply chain for semiconductors. ASML is an absolutely vital component of the overall supply chain, being the only manufacturers of the equipment necessary to create our AI-driven future. But they also have geopolitical strategic importance, given that they produce such cutting-edge technology. Technology that Western governments want to keep out of Chinese hands. Essentially, the goal here is these Western governments want to prevent China from developing competing technologies in the near term. But this strategic importance also helps ASML as governments support ASML's leadership in the semiconductor industry. It is vital that they maintain technological superiority. Now, ASML did have a bit of a drop-off in free cash flow this quarter, at least from the previous quarter. In the previous quarter, they had 9.2 billion in free cash. That is 9.2 billion in US dollars, by the way. You can see that they had 58.6 million used in cash for operating activities in Q1. That is euros, by the way. They also had 415 million in outlays for capital expenditure, also in euros. That translates to free cash flow of negative 499 million in dollars. However, that is actually an increase from the year over year. Last year, ASML did negative 734 million in free cash flow. So we see they still had a pretty solid quarter despite missing analysts' projections and this tariff uncertainty, which in my view is very short term. It'll all be worked out within the next 6 months to 12 months. That's total speculation on my part. And more importantly, we're seeing margin expansion out of already a very fundamentally sound business. Yet we're seeing pretty steep declines in their share price. Their 52-week high is $1,110.09. So right now, they're trading at 56.8% of that, at $630.20. And on a one-year basis, their share price has declined 35.5%. Year to date, like I mentioned before, they're down over 9%. So again, they're getting into a price level here that's pretty hard to ignore. Because if we look at their fundamentals here, we can see they're fairly sound business. They're increasing in all the right places. Revenue, gross profit, operating income, their earnings per share is all trended upwards. Now they have a bit of a slowdown here in free cash flow over the last 3 years. To me, that speaks more to the cyclical nature of the semiconductor industry than the business itself. One thing to notice is you can see the increased capital expenditure for ASML in fiscal year 2023 and in 2024. That increase in CapEx typically occurs in cyclical troughs for the semiconductor industry. Businesses are basically retooling for future growth. Yet, despite that, they had a nice rebound of their free cash flow in 2024. I'll show you what I think they're on track to be for 2025 here in a second, but overall, I think they have very strong fundamentals. This is demonstrating the margin expansion that I was discussing earlier. We can see that gross margin has expanded nicely in the last 10 years, just crossing 54% in Q1. 10-year average at 48%. Operating margin for Q1 was at over 35%. 10-year average is at 28%. So again, margin expansion over the last 10 years, and even free cash flow margin has a slight trend upwards in the last 10 years. Return on invested capital, we can see that the ROIC is at a very nice 33.5%, and the ROCE is at 39%, both of which have been trending upwards. That's very strong numbers for this business. Management is making smart decisions on capital allocation. Ultimately, when we run the numbers, ASML looks more and more like an opportunity that as a quality investor, you just cannot pass up. The estimates I'm using for the 10-year free cash flow projection for total revenue, nearly 9% on the bear case, 10.7% on the base case, and 12.59% on the bull case. I'm projecting operating margin to expand to 33% for the bear case, upwards of 37% by year 10 for the bull case, and ultimately free cash flow to grow by 6.74% on the bear case, 9.88% on the base case, and 13% on the bull case. That is my projected growth. Their 10-year free cash flow growth has been at over 27%. The trailing 12 free cash flow margin sits at 29.7%. I'm essentially projecting on the base case my free cash flow margin by year 10 to be at 29.68% or flat. For the bull case, upwards of 33.44% free cash flow margin. So with ASML closing the day at $634.93, that gives us a PE ratio now of 26.8, falling quite a bit below their 5 and 10-year averages. A forward PE now sits at 27.4. The DCF for my bear case is at $655.58. For base case, $838.89 and $1,072.60 for the bull case. The dividend discount I have at $568.04 for the bear, $741.53 for the base case, and $1,032.37 for the bull case. On my base case, I'm assuming 12.5% dividend growth over the next 5 years with a 7% perpetual dividend growth rate. So you can see that gives us quite a bit of upside for ASML. Now, without any margin of safety, we have a buy price of $823.27. It's a forward PE of 35.5. But of course, we want to see a 20% margin of safety with this business. That's a buy price of $658.62, or a forward PE of 28.4. So I think there's significant upside with ASML. I think they're trading near their bottom at this moment. They could go down further. Let me be clear on that. But this business is very strong. Demand is going to improve significantly throughout 2025 and 2026, and even accelerate as this AI revolution continues. So like I mentioned earlier, I want to do a deeper dive on ASML. But right now, this is just getting too good to ignore as a quality investor. And ASML is now at the very top of my watch list. I don't own any at this moment, but I am highly considering adding it to my portfolio. Thank you for watching today's video. And if you've made it this far, go ahead and subscribe to the channel. Thank you and happy investing.